Now, Vivek Chaand Sehgal from Motherson Sumi. Mr. Sehgal, great to have you on the show. This time, your standalone business has done very well. What's the growth outlook here and what kind of margins can one expect going forward?
We never guide on margins, but yes, the big savior for the last quarter has been the domestic market. Standalone Motherson has done very well. In fact, almost all the companies in India we are suppliers to, and all of them have really tried very hard to catch up with the demand. Obviously, there is huge demand out there. It's just that the shortages are challenging, and the raw materials and you can name it. Every single thing is a challenge. But in spite of that, they have done very well, and with the result, our turnover is up almost about 88%.
Sure. Also wanted to understand what kind of headwinds have you faced in your international business? What's the outlook there, if you could tell us, and how much of an improvement scope do you have?
So, we are very positive about the demand per se. It's just that certain circumstances are such regarding the semi-conductor issues and things which are improving, but are not improving to that speed with which we thought they would. We ourselves felt that somewhere around a year it would take to normalize these particular issues. There's still severe challenges out there. So I believe that while the car makers are all moving towards finding ways and means by which they can overcome these particular challenges, but the demand definitely is robust. There's a lot of waiting orders which are available out there. So, very confident of that. But just we have to get over the challenges that the car makers have at the moment.
Right. Mr. Sehgal, you recently raised funds as well. What exactly is the game plan here? Where do you plan to deploy or utilize the funds?
Definitely, there are a lot of things which are in the pipeline for acquisitions. And, in spite of the COVID times, we've already announced 3 acquisitions already, and many more will follow. But this 1,000 crores that we raised was basically to pair up our old debts and bring down the interest costs, and also just to create enough liquidity. We could have managed without it, but we thought it was a good time to borrow, and we brought it, and just to create a little bit of liquidity in the company, because of higher inventories that we are carrying and things like that. So that's the only reason why we took it.
Sure. Your EV order book, Mr. Sehgal, now stands at about almost touching 15.5 billion euros. And it seems that there are healthy new order additions as well. Are these new orders coming in from domestic market or overseas? And which segment is currently showing most traction?
While we are not at liberty to disclose where we are getting what orders from, because that's something the car makers want to keep it confidential, but generally the EV orders are coming more and more from outside India, more in the Western world. And in 3 quarters, they have formed 22% of our order book, and then 25% last quarter, and then this quarter it's gone to 27%. So definitely there is a need for us to imagine that the pure electric vehicle numbers might go up. But keep that in mind that the semiconductor shortage also affects the EV vehicles that much more. But in spite of that, we are glad to see that our EV order book is getting bigger and bigger. And we think in the future it will remain the same trend.
Right. Also wanted to understand, with the commodity cost inflation currently prevalent, wanted to understand how do you foresee it impacting your margins going forward? And do you now expect some softness at least to come in with the raw material costs?
While there are most of these particular things are passed through, there is a lag. That's the only thing that we have to be wary about, and we take care about that. I think we are grateful to our customers for their kind understanding. While some of the raw materials are trending down a little bit or stabilizing, there is still some raw materials and metals that are going up. But I think it's only a matter of lag. And yes, in our this quarter also, you would have seen that the raw materials have paid a price. But I believe that these particular things are going to become the normal, if you say, in the next 3-6 months. But then eventually they will all start to come down because it's not tenable.
Mr. Sehgal, some of the OEMs are now highlighting that the semiconductor chip shortage issues getting a little better and things are easing out a little bit. What's your experience, and are you now getting back the orders from OEMs after that production halt that one saw?
Very good question. Yeah, I think, it's too many car makers, too many truck makers and bike makers all around there in the world. So very difficult to generalize it. But definitely there is a pinch that is being felt. We feel that more and more the car makers are trying to come where they can get maximum return for their investments on the semiconductors. But generally the thing is easing up. And I feel that in the next 6 months to 9 months, maybe 12 months, you will start to see this particular problem also resolved.
Mr. Sehgal, we're going to leave it at that. It's always a pleasure talking to you. Thanks so much for joining us live today on The Market. We look forward to more interviews.